Everybody, Mike Vacchi, Princetontrader.com, here with your Week in Review Webcast. Okay, weekly chart. So that's a little toppy, to say the least. We talked about how you got the 20, the 50, the 100-day, and the 200-day moving averages here on the weekly chart that have kind of been lined up like layers. We talked about how the last 2 weeks you had lows here, 27.11, 27.17, 25, and that the 9-day had acted as support. That 9-day is down to 26.85 now. It wanted no part of the 50, the 100, or the 200 weekly moving averages. It tested all of them this week, and it would have been an opportunity to kind of stake their claim that they had a little bit more to this if they were able to close above 28.85, but they weren't. So what this sets up on a longer term basis is a retest of the 9-week. Well, it's a little bit like this here, although this is worse. It sets up a test of the 9-week. So heading into this week, the Bears certainly have the advantage, and we'll talk about that as we get into the other time frames. I don't want to get that short term that fast. Here's the daily chart. So a lot of consolidation, little dips down, little bleed up, little bleed back. So we're in a consolidation phase. The days they trade a little bit tighter, they're a little bit whippier, they're a little bit choppier. But that's the price you pay for some of the, just completely off the charts volatility that we saw in February and the entire month of March. April was a very volatile month as well. But for a lot of people, it's not the kind of volatility they want because we're going up and we're not going down. So most traders would prefer, just chuck it right down the elevator shaft and, like a Roadrunner cartoon, just wait for Wile E. Coyote to make the little puff of dirt as he slams into the bottom of the Grand Canyon. Well, that was March. April was about the Bears getting over the tips of their skis, getting rejected, basing, hopping, giving a little back, and then just kind of basing into the end of the month. It was a very slow, gradual grind up higher. Now, just like we talked about the 200-week moving average a couple minutes ago, the 200-day exponential moving average on the continuation chart was tested, 29.44. We traded as high as 65 this week. They couldn't convert that, and they didn't really do anything today to suggest that they wanted to go and take a look at it. And where do they end up? They end up closing below the 100, the 200, the 9-day, and pretty much jammed up right above the 50 that closed at 13. We're at 17. That pretty much held it in. That 12 holds it. You see the green line there, the daily middle band, which is, as of now, 85. I would expect that to hop up a little bit when we open Sunday night. But look, with us as close to that as we are, it's another opportunity for them to test it. So here was an opportunity, and an opportunity lost. They should have another opportunity next week to take a look at this. And that, for me, on my stuff, that's high noon. Mid-bands on daily charts help me answer the basic fundamental question, he tried to say. Are we a dip buying tape or are we a sell rallies tape? As long as we are above the green line there, we are dip buying. And you can see from the slow bleed to the upside, a lot slower bleed than people wanted, and every opportunity to fight along the way, but we are dip buying. You convert the green line like they did way back here, and it's sell rally city. We're just selling rallies and selling rallies. We were still selling rallies. Then they got it back, April the 6th, and it hasn't looked back since. It's due for a test. That test should come next week. hourly chart. Here's your 29.65, and the first part of the week was building it up and then taking it back. Didn't break the weekly pivot, but worked its way right back down to it. Like I said, right back down to that 50-day, converted that 9-day. And we talked last night and this morning about whether the bulls, or the bears rather, were going to be able to stay below that hourly mid-band. And they did. So as we open Sunday night, 20-day simple moving average, or the daily mid-band, that's going to come into play potentially. We'll see where the new weekly pivot comes out, 50-day. You've got a whole new roundy to fight over here. You were fighting over 2,900 Thursday afternoon. Now you get a little bit of a push, and Sunday night into Monday we're fighting over 2,800. And when you look up, you say, well, we're 165 handles off the highs. What happened there? So, again, the Bears have the advantage going into Sunday night, Monday. One piece of news can change all that, but they do have the advantage. So, what did we do today? Here's a 5-minute chart. It's pretty simple. The open for me was really whippy. I had enough of a bad experience with the afternoon on Thursday that I didn't really mess with it much. It went down to our proprietary lower level and did a really nice long. I sat it out. But once we got up here into the 50 to 52, 54 area and it couldn't get through, we ended up shorting it 52, 51.75 for a really nice move down. We got into a second move down and a third move down. And then come about 2 o'clock, we were done. Once it really started to chop again, I was through. So a solid day. Got nicked up a little bit barely in the morning. And then a couple, 3 really big trades for the balance of the day. So a good day, a good week. As far as this chart is concerned, it just underscores what we've seen on the other charts, which is when this tape decides it wants to consolidate, it gets very choppy, very whippy, and can bang you around if you let it. It is a golden invitation to overtrade. It's a golden invitation to take bad entries. It's a golden invitation to get whipped around, to hold on to stuff because you don't want to take a loser, and then it ends up being, for us, it ends up being a -5. So you got to be careful. You got to be careful. You got to be flexible in your approach, and you're going to have to take your lumps along with the rest if you're going to trade this particular tape. Do I think this tape is going to last much longer in its current state? No. Because it's going to decide what it wants the next leg to be, whether that is going down to the daily mid-band, like we talked about on the daily chart, testing all of that. And if it's a failure, as it fails all of those weekly moving averages up top, then you're going to have pretty smooth down gliding market May into June. But we'll see. All right. Everybody have an absolutely fantastic weekend. Be safe, be healthy. We'll have the weekend review out tomorrow morning. We're going to do 2 archive webinars for you guys. Tomorrow is going to be the one that we did just this past Tuesday on consistency as being the key to being a successful trader. Check that out Saturday. On Sunday, I'm dragging out an oldie but a goodie. Avoiding self-sabotage. The choppy stuff on that 5-minute chart is a gold-plated invitation to mess up a lot of good trades with some overtrading and some bad decision making. So give that a look on Sunday. Take care. Trade them well. I'll talk to you soon. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.